Hey, welcome to Candlestick Cash Radar, and we're looking at our weekly watch list here, but it looks like communication services and industrials were the only bit of green today, even though the market wasn't down much. You can see the S&P was only down 34 points, mostly because of energy, but nothing was really cooking today. So, and then you look in the last 1 month, the market is about a break even, with energy being that big push to the downside, 13% down in the last month. The best thing has been actually tech for the first time in a while, actually technology. So we'll keep an eye on that. But let's look at the Dow we'll look at a market summary here, starting with the Dow. So we got up to the 50 yesterday. We've had many higher closes in a row. And today not included, we're slightly down. It's a green candle. But we closed slightly lower, 17 points down on the Dow. So watch for resistance at the 50, but the short-term trend is up. See the T-line, 8 EMA rising. We're not yet in an uptrend, but we're in a short-term uptrend. So see if we can break that 50 and break the high of today. The high on the Dow was 414.44, measured by the DIA, and that is a higher high from yesterday, which was 413.87. So wasn't a higher close today, but we're getting higher highs still, and the Qs are in a shifting zone, so not a downtrend or uptrend. Of course, the short term is an uptrend. We have broken the 50 3 days in a row. You have a rising window right here, and you can draw that in. I always like to draw a little window for my visual to see if we can get back in there. I love to buy in those windows, but those are the Qs. So Qs are looking, overall better than the Dow, I'd say, as we saw with the tech when we looked at sectors. And then the SPY is the same thing, also in that shifting zone above your T-line, which is now crossing the 50. The 20 starting to slope up. So markets are looking at better. This is not a total uptrend yet, though, so it seems headed that way, but we'll see. So let's look at our watch list for the week. We have Hormel, and Hormel is a staple. It's a consumer staple. Hormel Foods, your XLP, which is not too bad. That's been the best sector over the last month or 2 months. So Hormel is in that sector and is forming a hammer. This is an extreme wick reversal at the bottom. It had one of those a week ago, but now it made a new bottom. Not a new bottom, but a lower hammer. And it's the same bottom as this Darvis. That's what you see here, and that would be the trade idea, is buying somewhere in this hammer, and it's called a bouncing ball. And so you're looking at a bouncing ball, and to bounce up maybe to the 200, around $31. Does it get to the higher Darvis? 32? I don't know, but if you could buy it around 29 bucks, maybe as low as 28.80. So that's Hormel. And then CVS, I know it's the same pick every week. CVS, that was actually a great earnings winner. I'd like to go over how you could have really made money with the earnings, but since then we've drifted down to the 8 EMA and the 20. And we're also in this window that was caused by the rising window that was caused by the good earnings report by CVS just a few days ago, last week. So, kind of this, you're at support, $67, and the Darvis there is 71.5. And so it's $4 of range. You could have a very tight stop in this one. You could stop around 60, 66.5. So you could really have a tight stop, enter in the 67s here, someplace. So I like that. One gap up, two gaps up, and you've just kind of filled that. So, and then ED. This is Consolidated Edison. Consolidated Edison is drifting in towards that 50, which is a rising 50. Yeah, it'd also be the lower half of this Darvis, so buying off the 50 would be the idea there. And it's in a good trend, so we're looking for something. It's kind of drifting in a very good trend, and then Hawkins This is Hawkins. This is a chemical ingredients company. So, it's a chemical ingredients company. So let's see, 119. Yeah, so I just noticed you have a good trend. You have a good trend. You broke over the 200 with a gap, closed it, and you're kind of around that 200 still. You haven't really gone anywhere, so just flagging out here. The 20, however, is sloping up nicely. So you could buy right off the 20 or off the 200. And you have a signal here, which is the kicker. See the red candle, gap up green candle, that's the kicker signal. And then we drifted right to the low of this signal, so you can get a very good buy. Have a tight stop on this one as well, because you don't want it to. Certainly I'd have a stop under the 200, but you could even have it under this kicker signal here. But we held the signal, but it's got to trade up from there if you're playing off that kicker. So those are 4 trade ideas going into the week. Welcome to May, and happy trading.